When you think of the free cash flow with Apple, we're talking $50 to $60 billion per year. That's free cash flow. When they talk about their current cash position, call it roughly $75 billion. I mean, they've continued to try to whittle that down, return that to investors. Welcome Meta to that conversation regarding returning capital. But Apple is unique in that it is, it's mind-boggling. If you look at the past year, revenue has basically been down 2.5%, but they've generated, call it $60 billion in free cash flow. Yeah. And I think it just speaks to the strength of their margins.
Paul, I put this out last night in preparation for Gene Munster that I'm just had it with this sophomoric growthiness study of the media, and it's about the profit. And as Gene mentions, Paul, Zuckerberg gets the 2023 trophy. The way he has shifted Facebook to a profit juggernaut is jaw-dropping.
It really is, and the stock got rewarded for it too, more than doubling here. Hey, Gene, so last night, busy night for you and busy night for tech investors, Apple, Amazon, Meta. I want to start with Apple here because for me, and I think for a lot of investors, it's very much about China here, and I'm not sure I heard anything from Cupertino last night that makes me feel more comfortable about what's happening in China. My concern is maybe the consumer's moving away from Western products in general, and maybe Apple in particular. How do you think about China?
China hit the wall. It was down 13% year over year. It was down 2.5% year over year in the September quarter. So we saw that deceleration. The macro has definitely impacted that. If you look at broader Apple business, it was up 10% in Europe, 15% in Japan, 2%. So if you think about what's going on at Apple, it really can be zeroed into the weakness in China. China's 20% of their business. And then the question comes to, what does China look like going forward? And I think the answer is to continue to expect it to be down kind of this 10, 15% for the next few quarters. There is the question, is this just a macro issue related to China? Or to your point, is there just a structural shift away from Western products and Apple in particular? And what we saw was some conflicting data. We saw the China business being down like we talked about, but we also saw that Apple, in terms of its market share, IDC, reputable source, said that that the iPhone is now the best-selling smartphone in China for the first time in the December quarter. And so I think the answer is this is more about the macro. I do want to put one just slightly finer point on this. There is a dynamic of what's going on with the government and their commentary about buying Apple products. Now, if you look at the number of government employees, this basically can create about a 3% headwind to China's business. It's not a formal policy to avoid Apple products. It's been this informal kind of wink and nod. But I think that probably plays in all this too. When you roll it all together, I still think China's a big opportunity for Apple. India is becoming a bigger opportunity too. And I think that this storm will pass.
Yeah, and that's kind of, I think, the message we heard from Tim Cook. I think he's probably taking a little bit more of a longer view. All right, let's switch to Meta. You mentioned that, and just what a story here. I mean, and, you know, Zuckerberg gets a lot of criticism, and he obviously was on the Hill again recently. But, boy, did they turn this company around in the last 18 months. It was, you know, since its inception, it was a top-line growth story. And then he wisely focused on costs and profitability. And, boy, that's paid off for the company. What's your view there on Meta?
The cost is, that's nice. Absolutely has paid off. I think there's a bigger dynamic playing out here, which is just related to their demand. And they had their revenue was up 25% year over year in the December quarter. They guided, you got to go to the high end of their guidance range because they're probably going to exceed that. Would imply an acceleration to 30%. Their price per ad was up 2% year over year. A year ago, their price per ad was down 22%. Yep. So that's outside of the whole expense control. The ad market is better. But there's something, the bigger thing going on is that their products people want. I mean, that's the maybe optimistic way to say it. The more skeptic way to say it is they're addictive. Deepwater does own Meta. This is something that I struggle with. But we saw it in the numbers, in the engagement. It's playing through to the revenue. One just other quick thought on the engagement number here. Their DAUs, this is a metric they're no longer going to give, daily active users, but that was 2.1 billion for Facebook. That was up 6% year over year. It's an acceleration over the past few quarters. Remarkable testimony to how people say they don't want social, but they spend all their time.
Yeah, well, the daily average use of Instagram in the Keene household is incalculable. You can't do that number. With us, Gene Munster, for this entire half-hour commercial-free. He's with Deepwater Asset Management. Gene, here's the real world. It's owned by portfolios. NASDAQ's up 1% right now. And we're going to pick on our good friend Will Danoff up in Boston. He's been doing this for a few years at a shop called Fidelity. It's his largest holding. It's grown out where Meta, Facebook, is 12.x% of Will Danoff's contra fund. But he's probably under-owned it as well. Just the share price today moves contra fund 2% off the leap in Meta. Are these stocks under-owned by institutional Wall Street?
I think Meta is. I think there's still some controversy around just what is ultimately, what does their advertising business look like? I think there's concern about regulation related to it. If you look at the multiple relative to the other big tech companies, it still trades at a discount. So it's going to be, I bet the earnings go up by more than 20% today. The stock up 18% in pre-market, I bet earnings go up. So I think the multiple probably is actually surprising and to stay in that low 20 range where you look at the rest of big tech kind of loosely in the low 30 range. And so based on that, I don't think this is over-owned. And I think that there's, there's room to go. I think this should trade in line with the rest of larger tech.
Okay, so they're $3 trillion. A guy, an Uber bull like Dan Ives says, what, Paul? Four trillion, 5 trillion. Sure. Add it up, Gene Munster, and someday these four stocks, the Magnificent Four, whatever, NVIDIA, I'm not there yet. I know Gene is, I'm not there yet. But Gene, they're going to have an all-in value of, say, $15 trillion. Are they like the Rockefellers, Standard Oil, Ida Tarbell of 120 years ago, where there's going to be a primal cry, they're too big? Are we getting there quickly?
I think we were there 3 years ago. And I think that, this is lessons learned from the past here, just about can things keep going, about bubbles. There was the everything bubble a couple years ago, obviously what happened in 2000. So I'm skeptic. I want to be just cautious, like, can this keep going? But just the case that I think these will continue to get going. It is as simple as artificial intelligence. I think that this is something that now Apple has stepped into the game. That is as much of the rancor that goes on Capitol Hill related to large cap tech. I think lawmakers understand that these companies, having strong domestic companies that are building AI, I think they understand the importance of that from a national security standpoint. And so I think that there'll be always talk of regulation, but I think these companies will continue to get bigger.